All right, hello, and welcome back to another video. In today's video, we're going to share something that honestly has changed the way I not only look at investing in general, but it's changed the way that I manage risk. This technique is extremely powerful, it makes a lot of sense, and it gives you a lot of confidence with your decision making when you're trading. So if you haven't already, hit that subscribe button. It literally takes 2 seconds. While you're at it, hit that like button so you let me know that you like me because I like you. And please feel free to comment if you have any questions about any of this stuff. I'll be happy to have a discussion in the comment section at any time. All right, let's jump right into it. The Ghetto Spread. I learned this concept from the Trading Fraternity on YouTube. First of all, if you don't know who the Trading Fraternity is, you should definitely check out his videos after this one. He has a ton of educational content on his main page, and he also streams during stock market hours Monday through Friday. His channel is a great resource for all things stocks, finance, philosophy, and overall being successful in general. Fun fact, he's a big reason why I even got into finance content creation in the first place. Now look at us, we're sitting here with just about 100,000 followers on TikTok and a brand new YouTube channel. It's been an amazing journey so far and we are just getting started. Okay, now let's jump right into it. The Ghetto Spread, aka legging into a debit spread. Don't freak out if you don't know what any of this means. Keep watching. I promise you'll either love this technique or you'll find a way to apply this technique's philosophy to any trade that you make in the future. Whether you're an options trader or a day trader, swing trader, long-term investor, or just interested in getting started in general, this concept will resonate with you and you will learn something along the way. Okay. Now let's jump right into it. The Ghetto Spread is the coolest way for you to lock in your investment, possibly even lock in profits, but still have upside potential with little to no downside risk. How is that possible? Let me show you with a made-up example with easy numbers so we can understand. Now, in this example, I'm going to use an options trade. If you don't trade options, again, don't worry, you may be able to apply this concept to something similar. In this example, let's say you bought one Uber April 16th $55 call for $150 a contract. That means you have the right to buy 100 shares of Uber at $55 a share at or before April 16th. The right to buy that will cost you $150, and that's what we call the premium. To make our example a little interesting, let's pretend like this contract did really well. The next day, Uber shoots up from some crazy news from the CEO. Let's say he comes out and says they have a new technology coming out that'll help Uber Eats deliver food to your house with drones or something. That cool news sends the stock price soaring. Let's say it goes up 10% the next day. Let's say your $55 call shoots up a lot in premium. Remember, you paid $150, but let's say now, the next day, it's worth $300. So that means it shot up $100 in value. So some people would want to sell that and secure the 100% gain. Some people would want to exit that position and just walk away a winner, right? Some people though can't make a decision. They say, oh, what if it goes up more? Oh, if I wait a day, a week, an hour, it might go up more. I don't blame you. It's a hard decision. Do you sell? Do you wait? Do you lock in profits? What's the best way to get that initial 150 that you put in back? What's the best way to make some profit, but you still want that exposure? What if after you sell it, it goes up? What if you don't sell it and then the CEO comes out and says he was just joking, they can't deliver food with drones? Then you lost all your profit. You'd be pissed. I want to stop being pissed. That's why I utilize the Ghetto Spread. Remember, you bought that $55 call for $150. It went up in value. That means every other option should have also gone up in value. Go to the options chain, find a contract farther out of the money, find a contract that will give you $150 or more if you sell it. So in our fake example, let's assume the $60 call is now selling for $200 a contract. Since you already own the $55 contract, you can actually leg into a debit spread or Ghetto Spread and sell the $60 call without having to own the 100 shares that are normally required to sell calls. I can make a video on how to sell premium in another video, but the idea here is since you own the $55 contract, you can sell the $60 contract and collect that $200 in premium. So what just happened? You got your $150 back plus $50 in profit. But wait, there's more. Now you're in a debit spread that you pretty much got paid $50 to hold. You still have upside exposure. $50 is not your max gain. Now you're in a 55-60 spread. You actually have a $500 max upside exposure. Again, I can make a video on how debit spreads work later, but real quick, the way you know your max upside potential is by looking at the difference between the strikes, the difference between the two contracts. So you own the $55 and you sold the $60. What is that? That's a $5 difference. Remember, every contract represents 100 shares. So take that 5, multiply it by 100, your max gain is 500. Okay, so to recap, you paid 150, you got paid 200. That means you got your 150 back, you profited 50, and now you have exposure for another 500 if Uber is at or above $60 by your expiration. Interesting, right? Check out this TikTok that I made that shows this trade in action.
Let me show you how I just got paid $10 to hopefully make $250. In this trade, I can't lose, and I challenge you guys to find a way I could lose. So I bought a Snow March 19th $250 call for $400. Snow started to go up, and then it went down, and then it went up again. So I looked at the options chain and I saw that the 25, 25, 50 calls were going for $410 a contract. I sold one at $410, getting $410 cash, covering my initial $400 plus $10 profit. Now I'm left with a debit spread that I got paid $10 to hold for the week. My max gain is $250. My max loss, nothing. I made $10.
Now, for the people who have no idea what I just ranted about, the idea is whenever you get into a trade, always look for a way to minimize risk and increase upside exposure. Can you do something similar with normal stocks and not options? Yes, absolutely. It's just a little different. Let's say you buy 100 shares of Uber at $50 a share. That's $5,000 that you just spent. Let's say Uber goes up to $100 a share, maybe in like a year or so. That's a 100% gain. You could, if that's your trading strategy, you could lock in your initial investment and hold the profits and let the profits work for you risk-free. The only thing you're risking is your profit since you took out your initial investment. You bought Uber and spent $5,000. Now your total is $10,000 since it went up 100%. If you sell 50 of those shares at $100, that's $5,000, leaving you with 50 free shares. It's just the profits. So you removed your initial investment, your initial risk, and you let the profits sit there and potentially capture any upside. This strategy completely changed the way I look at all of my investments. I always have my eye open now to opportunities where I can secure my initial investment and still have potential upside. It creates win-win opportunities. It creates scenarios to get lucky. Remember, luck is when preparation meets opportunity. Now that you've watched this video, you'll start to see these opportunities and you'll be prepared to get lucky. Again, if you have any questions or if you need me to clarify anything in detail, I'd be more than happy to do so in the comments. Also, if you have any video ideas, I'm more than happy to dive in deeper on another topic as well. So please, make sure to hit that subscribe button if you learned anything at all. Make sure to check out the Trading Fraternity. He has awesome videos. And make sure you have an amazing day. Because what's the point of stocks if you don't have an amazing day, am I right? I know I'm right. So I'll see you on the next video.